What's up, guys? It's Robson Hayashida here, and today we have a question from one of our viewers. His name is Ray. And just to let you guys know that I have previously asked Ray if I can post his question here on my YouTube channel, to which he said yes. So let's read his question. He says, "Hi Rob, just watched your videos twice on Pvsra, and I have some questions if you don't mind." So let's take a look at his question. First of all, which is your favorite way of trading Pvsra? Break of dragon or bounce of the dragon? Ray, honestly, I don't really have a preference. As a cigar guy always says to us, you take what the market gives to you. Okay, so whatever the market gives, if you spot the opportunity, if there is a possible Pvsra entry there, you enter, you take it, you take the deal. So you take the trade. So I don't really have a preference. Although I really like those engulfing patterns that form sometimes, but I don't really have a preference. If I spot a break of dragon, I'll take it. If I spot a bounce off the dragon, I'll take it as well. So I don't really have a favorite way of trading. Number two, a break of, for example, a resistance support with a high volume candle confirms the break? No, it doesn't. What you have to see is, also Cigar Guy says this, Pvsra is a piece of art, so you have to see it as a piece of art, so everything has to be in harmony. And I'm gonna explain to you what I mean just in a few seconds. So another reason is Vape told us, I think he said this yesterday, that it's very hard, it's very difficult to spot a breakout. It's very difficult. And he's right. Why is he right? So I took here, I spotted a very good example to illustrate to you guys. This is my demo account. And here you have a very clear break of the key level, because when you look at this red candle, it's massive, and it has a very big, it has a notable volume here, which is bigger than the previous two candles, right? And it clearly broke the 130.000 key level. So on this key level, you see a very clear break. And why didn't I take this trade? Why you shouldn't take this trade? So you can argue and say, oh, but it really broke. Yes, but it's not very clear. First, it's not very clear break. And what I mean by break is something that happened a few candles after that. So here, when you look at this one, you have a break. Why? It's a very nice break. First, because it breaks the whole structure on the left, so you don't see anything here below this point here. And secondly, because it also breaks the key level 130.000 here. So you have this key level here that was clearly broken, because I have a huge and massive candle, which doesn't happen here. So to answer your question, just that doesn't really confirm, like just by having a high candle, like a big candle with notable volume, doesn't really confirm anything. You have to look at left. So I always say this, look left, see that the whole structure is being broken with a massive candle, all right, and notable volume. So once you have this, you have a bounce back to the key level here. This would actually be a very nice entry, very nice bearish entry opportunity here, right here on the key level. And I hope you guys understand. Number three, any advice for beginners like me what to look out for first when opening a chart? I'm closely monitoring EU on M1 and M5. I'm not sure the first signal should be for me to look for a trade and to monitor PA. Ray, I would say first, what I do, whenever I open my chart, I first look at this guy. I first look at this script here. And this is the currency strength. Because I want to spot pairs that have very big difference between like the move. And I want to see that I honestly, I prefer to see a very, like a currency that has strength, like a high strength, as compared to a currency that has a low strength. And I spot those pairs. So in this example would be CAD yen, right? So that's what I like to do before I just spot the major pairs. And of course I don't trade pairs that nobody trades. I like to trade dollar yen, euro dollar, euro yen, and well, those are the major ones that I like to trade. And of course, sometimes I will trade CAD yen or any other like pairs, as long as I have very small spread. So the spread is also important. For example, we're above the 50 and 200 EMA and price is now retracing back to Dragon. What do I now expect or want to see? Does my question make sense? Yeah, no, it does. It makes a lot of sense. And but all you have, okay, so we're above the 50 and the 200 EMA and price is now retracing back to Dragon. It makes sense. It makes sense. So this here would be a very good example for what you said. So we are above the 50 EMA and above the 200 EMA, and price has retraced back to Dragon. So let's say that I don't see, okay, let's say that we are right here, so I cannot see, let's say I cannot see this part because we are still here. So Ray, this happened, oh, so we were above the 200 EMA and price retraced back to Dragon here, right? And also here, right? So this is what you should be looking at. And why did I pick this exactly? Because this is something that, like, you may think the price will go up, but it went down. This is a very nice example. So we are above the 50 EMA, we are above the 200, but even so, price retraced it back to Dragon and went all the way down to this level here. So this is something that you shouldn't, you should pay attention actually, you should be really careful. And that's the lesson for today. I see you guys next week. Bye.